Hello, everybody. Welcome to our TiE Women Connect mini-series, and welcome everybody from various parts of the world. So good morning to those in West Coast, and good evening to those in India, and obviously we are in the middle of the day, and those who are in the middle of the day. So thank you for joining. TiE's very honored to have the people who are leading this mini-series, the two women that have just been mentioned, TiE and Hema, who are doing a great job of taking this whole initiative, TiE Women, and encouraging TiE women, women entrepreneurs around the world. And in that mini-series, and since I am also on the executive committee with them, we are honored to have our guest here, Jill Nelson, who we are all wanting to hear from. And Jill is certainly, I'm honored to introduce such a person, and good to get to know you, Jill. It's been fun to talk before, and I want people to enjoy this session and learn from it, because this is a very unique story. In general, in TiE, we hear about people who are tech entrepreneurs, and they are technology people who are sort of coming from that background, or business people coming from that background. Jill is unique in bringing the story to a lot of us a lot of people here who may think that, you know, if they're not technically trained, that they shouldn't be in a tech business. But she defied that all along, and as well as she has been very self-made and relentless in her pursuit, as it says in the title. So let me introduce Jill. She is right now, at present, she's the TiE Oregon's board member, as well as, so that's her connection with TiE, as well as the member of Elevate. She's a general partner at a VC firm called Elevate. So her journey began with a company that she formulated and took it to the exit of a very successful 100 million exit, and that is Ruby Receptionist. And that is what she founded, and grew it to 630 employees and 10,000 customers before handing over the reins and getting that great exit. And how often do you see that? So that kudos to you, Jill, for that. And she, under her leadership, Ruby holds the record-breaking position as one of Oregon's fastest growing companies for the last 12 consecutive years, and was repeatedly named as top 5 places to work in the US by Fortune magazine, which is quite an honor. A lot to be said about that. And then Jill is from Oregon, and she grew her company there. She was Pacific Northwest 2017 Ernst & Young Entrepreneur of the Year, and get this one, and she was named the 2017 Oregon Technology Executive of the Year. So this is why I said that title, it was the first for a woman to receive this recognition, is hard to come by, because and as we will hear her story, that she didn't start in technology, and then she grew a technology company. So that's a lot that we can learn from. Jill sits on the board of, as I said, Ruby.com, which is the company she started, and she's also an operating advisor for Updata Partners, and also, as I said, board member of TiE Oregon, and works with a VC firm called Elevate. And Elevate is also a firm started by Nitin Rai, who we all know as he was the chair of the Global Board of Trustees of TiE for a few years, and just stepped out this year. And Elevate is committed, I think, to is a VC firm committed to women entrepreneurship in a very big way. So with that, Jill, hi. How are you?
Hello, I'm well. I'm so very honored to be here, and really appreciate that very warm introduction, and excited to talk with all of you today, and hopefully provide not only some inspiration, but maybe a take-home nugget or two.
Right, that is the idea. Idea is to just catch the wave and see what all you learned from your journey. So you started Ruby with, I understand, with $17,000. Tell us exactly when you started, and with no business experience.
No business
And
experience.
that's very, and then to take it that far to 100 million exit, and in make it a technology based company is quite a journey. So how did you get Ruby off the ground? Let's talk that first. How did that happen?
Yeah. And so, so back in 2003, which is the year that Ruby launched, and I think I started working on this project in 2002, not having business experience, I had never even heard of angel investing, really, and I certainly didn't know what venture capital was. And if an organization like TiE was around then, I did not know about it. I just had a business idea that I thought would be successful and a drive that to make it happen. So that began the relentless pursuit. And without that outside knowledge and my mere $17,000, it just became, okay, how do I get this off the ground? And what I did know about was SBA loans. And I did know to write a business plan, and I went to the SBA site, the US government SBA site, download a business template, took it to the bank, got a small SBA loan. The solution that I wanted to provide, which is real receptionist, daytime receptionist for a small business, but done remotely. So not just answering phones, but routing and being helpful. I knew that required software, and I knew it required a sophisticated telephone system, and I didn't know where to find either one of those. So I went to the phone company, and oddly, the phone company proved to be the most helpful, and it was their VP of engineering that sat down with me, helped me find the right technology, got really excited about the business itself, helped me figure out what I need to do from a call routing standpoint and the kind of services I need. And, a lot of other things later, Ruby launched in June of 2003 I had hired 4 full-time employees and 0 customers. And had to build a space and buy the expensive phone system and sign a long-term telephone contract and lease. All of that was a big gamble, roll the dice, every last dollar I had, plus future dollars. And 0 customers, and we were off to the races. That's Ruby.
That is interesting. Just step back a little bit and tell us what gave you that idea of starting Ruby, because when you were in that kind of field and you realized the need. How did that need be discovered? Just 1 second on that. Yeah. 1 minute.
Yeah, and I do have a business degree. I did study accounting at the University of Oregon. By the time I graduated, I understood that a role in traditional accounting didn't quite match my personality. But really just floundered around a bit until I had a son and stayed home for a while. And I took a job as a receptionist for a business broker. And at the time, I also felt like, oh, receptionist, I have a college degree, that's below me, which is so funny because now I feel like it's the most important position in any company. It's your first impression. But I went to work for that business broker, and I really started to understand that role. I certainly knew it backwards and forwards, but I also got a great education in the value of businesses. And these are small businesses that were bought and sold, sort of a miniature version of what we see in M&A. But I started to understand how to value a company and what really was sustainable. And I got really attached to both this idea of recurring monthly revenue. And again, this was late 90s, but I'm like, that's the kind of revenue, if I ever start a company, I would like. But I also had a real affinity for the small business owners that would come in the door. And I just really was inspired by their dreams and their creativity. And I really knew I wanted to help small businesses. And then we sold a company that was an executive suites. And that too was like, that's it, that's small business plus skills that I know, recurring monthly revenue. That was going to be my idea. But as you've already heard, I had no money and no business experience. So I couldn't find a landlord willing to build out Class A office space. For those of you who executive suites is a new concept, it's actually an old-fashioned WeWork. It's co-working, but traditional offices, shared receptionist, shared secretarial, shared copier services. So that was really, it was a pivot before I even got off the ground. So that is, I was like, well, if I can't do the executive suites, how can I still provide the function and the value to those small business customers without the real estate? And so that's where the idea came from.
So truly there's a passion there already before you started the business, that you already wanted to be, well, recurring money revenue is always an attraction, but more importantly, you associated obviously that to something you already looked at and said, this is where the market is needed. Market needs that, and people need that. There's some pain points there. People want this thing, and that's, you just went to solve the problem without knowing how will you solve the problem. In reality, you went to a phone company, and then you didn't realize that that's will be the biggest help, right? So that's an interesting. And for those outside US, SBA is the Small Business Administration that gives loans to small businesses. So that's where your first loan came from.
That's right. And I think you hit on a really great point. And now in the VC hat as a general partner at Elevate, we have this thesis, like problems that need solving are often outside the bubble of, the Bay Area. Not that there's not problems to solve there too, but it's the everyday problems that people that live and breathe and understand, that know, that get solved, that become successful companies. And so it really supports the thesis that we are looking outside and investing in the underrepresented entrepreneurs, because frankly, they're the ones solving problems nobody's solved yet too.
That's a great point as an investor to be looking at, that's what you're looking at, and you've learned from your success that if you're solving the right kind of problem, which is everyday problem, normal problems for businesses or for people. Right. If it's a consumer business or if it's a business related customer business, you really need to be solving a pain point. That's a great strategy to think about now that you look back. But of course, at that point, you started that. And then tell us a little bit about, so what were the obstacles, and what created success? What were the factors that went in as you took the journey?
Yeah, so on the plus side, Ruby took off, well, very slowly, much slower than I put in my pro forma. And so as you imagine, cash flow was huge issue for the first couple of years. My first employee teases me that I used to say, don't even buy a pencil without telling me. But what I would say is the service was great. The value that customers got was real, and they stayed with us and they told others about the service. We really delivered on that promise of, we'll help you, give you peace of mind, we'll take great care of your customers, we'll help you grow your business. So all of those things, because we really did deliver on what we promised, the growth started happening. The big challenge for such a long time, because of the business, until we got to critical mass with phone calls, we would have to pay people to literally sit around and wait for the phone to ring, because we had to be staffed all day. So getting to cash flow positive was such a challenge. And, it was daily cash flow management, definitely tap the bank. Once we were, revenue, high growth revenue, we were able to use some other services, but I, more than once had to pull from personal to make payroll. And then that happened. And then sort of once we reached critical mass, it was constantly breaking bottlenecks to continue to scale growth. So once the demand was there, whether it was the sign-up process taking multiple days and only one person qualified in the organization to do it, we had to automate that. And so I started hiring programmers to automate the processes that were bottlenecks in the service. And then we realized in about 2009, and we were buying different people's software and putting it on top of these phone systems. But about 2009, we were like, if we are going to scale, we have got to create our own software platform, because there's no company that makes software for a virtual receptionist. So that's when we really made the decision to become a technology company and design our own platform software, design a software interface for our customers. At the core of the service was still the people, but that was a huge bottleneck, and ended up still traditional financing by that time. We were cash flow positive and growing at a really nice rate. So actually was able to, I used equipment financing for computers and servers and telephony equipment. And then I used our bank relationship for traditional loan. And I actually got like a $500,000 loan to build out the software platform back in 2011. So that was a big, big pivotal moment. Learned every possible lesson you could learn about people. We are a people business, so whether it's training, leadership, EQ, you name it, that's probably the biggest. It could be a whole nother hour. And then, yeah, and then I mean, I think the next big landmark was I did take private equity in 2014. I did a recap and sold a majority of my shares, but still stayed on as CEO for up until late last year.
So the couple of things to take away, as I'm seeing it, is you didn't, when you started it, and when somebody thinks of a receptionist, you first thought about the phone, answering the phones, and getting the messages out and all that to people. But as you got into it and realized that all the functions that they did in terms of document signatures or helping the accounting and whatever parts of the businesses, that the services actually grew, and then you found niches in each of these service areas along with just the phone thing. So then that's how your services grew as your customer base grew, right?
Yeah. Actually, our services shrunk before they grew. The phone piece, which was really, and it wasn't just answering and taking messages, it was actually answering and then transferring the calls to people where they work. And you're right, we did all of those secretarial services, tried to do them remotely, but this was like 2003, 2004, before all the remote data, all the tools that are so easy for us to work remotely, it did not scale. So we actually shrunk those. And as we had more and more customers and more receptionists, we actually had to really even shrink our offering on the receptionist side, because we couldn't use our brains. We needed to use the technology in front of us. And it wasn't until a couple of years ago when we expanded, tying in calendar programs, buying a chat company, that we really were like, hey, we're really about delivering a great experience for our customers. Now that we're successful and we have this great technology platform, and technology is where it is today, we can start to acquire other pieces. And because like you mentioned, those small businesses need all of those services. And so it was challenging to have to say, no, this is the area where we can be helpful, when small businesses need so much help, so.
But it is remarkable that the services kept growing.
Yes.
Right?
Yes.
As the technology started catching up, or you started adapting to technology. So technology became the tool, the bigger tool it was a driver for your company, and you got into it in the right time. So that's for everybody who's entrepreneurs to think about it like that, is what can the technology do to give them the pivot and make the jump, right? So now in terms of finance, as you said, you bootstrapped the company from the get-go, and you didn't take any kind of private equity for a while. And so when did you first get into financing the firm? Or when you first took first equity investment?
Yeah. And it really was at a time, Ruby was a very, very, again, fast growing. We got our receptionist technology up and running, and then it was kind of on, cruise control. And again, not coming from this world, I had no idea, but an investment banker came to me and said, I think your business is worth this. And I said, I totally don't believe you, but if it is, I'm listening. And so I actually entered a process thinking that might be my exit period. And we got lots and lots and lots of interest. And now when we had companies looking, even the ones that passed or the ones that didn't make the final process, they would come and visit and ask the kind of questions that were like, wow, oh, Ruby could really be something else. And they got my creative juices going again. And by the end of the process, I was more excited about the future of Ruby with an equity partner than it sort of reinvigorated me. And there's this new vision of what Ruby could become, incorporate, much more technology incorporated into the everyday lives of our business customers, really expanding what we can be for them. And just a wonderful, fun challenge to embark on with some equity partners that had really been there and had many, many other successful portfolio companies to be helpful along the way. And that was the unknown piece, which is like a really big learning lesson for me, is how much my world changed once I had outside investment from a reputable software and private equity company. That was a huge eye opener, which is, if there's anything about like, if I had to do it over again, would I have sought that kind of a investment partner? And, there was definitely value there. It's definitely something to consider.
That's great to know. So there are two questions in that is really, how do you choose an investor? I mean, how do you assess whether it's the right investor for you?
Yeah, and that is such a great question. I was so Ruby, and I'm sure many of you with startups out there feel similarly. Ruby was my baby, and the culture was huge. The people were so important. So I was super selective about who I would allow into the process about investing. The money was already like, it was going to be an area where I was really pleased. And so it really was about, who do I trust with my baby? And that ended up being a great way to go, because as I've learned and met other people with, investors that weren't as CEO friendly perhaps, and maybe had diverging interests, can be really, really, really challenging. So, what I would say to someone seeking investment now is, who is that partner that not only values your company the way that you need it to be valued, but who aligns with your vision? And do they understand your mission and your culture, and do they recognize that as a competitive moat to where you're trying to go? That's really core. And then, how can they support you? What experience, tools, connections do they have to help you? It's not just the check. It's really about, how are they going to help you get it to where you both put, and you want to be aligned there too. So the timing, who you want to exit to, if you're not aligned there, because this is, there's no private equity company that wants to invest forever. They all have a cycle.
Yes. Right. So this is interesting that that you have an idea that was great, that had to be great for people to want to do more with your firm and get others to be attracted to your company, to your money. You have to have an idea that succeeds and some tools that actually pivot you to a larger success. And then you choose the investor who really wants to go with you. But then, how is it as a CEO? Do you see being a CEO of a company that is yours versus a private equity? That's
having a boss.
Yeah, having a boss.
Yeah, it was really it was just challenging at first, because I would forget to oh yeah, I should probably talk to the board about this. But again, because we were so aligned, and Updata Partners is the company that made that investment, and their whole philosophy is, hey, we invest in teams who we really believe in, and we just want to be helpful in areas where we think there's help to be had, but we wouldn't invest in you if we didn't trust in your vision and your team and all of that. So in area like you mentioned, I'm not a technologist, so they were it's why can't I get technology to the finish line? And they said, well, you don't have a head of product, and you need a head of product. And I was like, what's a head of product? I mean, that's how naive I I was. So they were super helpful with that. You know, we have a formal board process, and they gave me really amazing sort of data insights to understand how equity, you know, financial buyers and financial investors really look at the underlying metrics of a company. It's not just top line revenue, it's all these different levers, and to really be able to understand them, track them in a way that keeps us on track, and helps us be a healthy company. I mean, and then just wonderful connections, partners, and just other entrepreneurs to network with, and just a voice of confidence when we needed help. So couldn't ask for a better investor. And as a general partner at Elevate, that's really what I intend to emulate, is support and guidance, but really, you know, just being.
That brings us to that question for all
Yes.
of us who are, and you know, I'm a successful business, but we all have done, you know, many businesses along with investing in companies.
Mm-hmm.
And you mentor them along to some point.
Mm-hmm.
But I think as now that you sit on Elevate, where your
Mm-hmm.
next thing is about
Mm-hmm.
women entrepreneurs is a very big thing in Elevate,
Yes.
and also underserved communities. The
Yes.
focus is, and also that whole focus now of changing, you know, there's a lot of focus from, you know, BlackRock and Goldman Sachs and all of them on environmental sustainability.
Mm-hmm.
How do you
Yes.
see, what kind of factors do you see as an investor that you want to see in a company?
Yeah. And all of those funds that you mentioned, those are really great funds. And I would put Elevate at that, you know, in the area where we can make that initial investment and help you get to a place where those larger funds are saying yes. And just like you said, so many underrepresented entrepreneurs with wonderful ideas that aren't coming from that traditionally private equity backed background. So that's again where we can help. Like, hey, you do what you do, you lead what you do, you have the wonderful vision for your product. Let us help you with, you know, the things that will help you have that next stage of investment say yes. And it's just tools and metrics and guidance that nobody knows about if you don't live in that world, you know?
Very true. So for all those who are listening, and for all of us, this is very enlightening to know that not only that you should just take your own initiative and go forth, and many of our women entrepreneurs that are on this call will relate to that either sometimes they are or they're not technology experts, but they are or not risk takers, but they need to just pursue what they think is a problem they're solving. And I think just and you will find people along the way if you take the risk to help, if you're really relentlessly pursued, right? And
That's
then
right.
and then the different services can be morphed. And so this is a great story, and that you learn these whole investment business and private equity business and get help from them as you get along the way. So your story absolutely is inspiring, Jill. Such a pleasure to talk to you. And I think there's a lot of people who have a number of questions.
Okay.
And Dharti, who's been leading this TiE Women with Hema, is here to orchestrate questions. Hopefully the audience will have, and we will learn more.
Wonderful.
Pleasure.
Well, thank you. It was so nice to talk.
Thank you. So Dharti, it's yours to take the questions.
Thank you so much, Smita and Jill. What I love about how this has happened and what women in power like you do is the pay forward. So fantastic, so inspiring. And Jill, your story, of course, is worth writing a book for.
Right.
And we look forward to that one day. But really, thank you, Jill, for what you continue to do, you know, staying real and staying connected with the community. We appreciate that. I know you were a big part of the TiE Women Pitch Competition in New York. You make time for all of us. It's this paying forward that you do, which is wonderful. So I know there's a lot of questions coming in and we don't have that much time. So I'll try to cover as many as we can, but we'll definitely put it out there for others to reach out even after today if there are more questions. I know you're very approachable, so thank you so much for that. So one of the first questions, Jill, is and this is very true. A lot of people always ask about exit strategies, right? So there's a question from Marissa who says, I've been to pitch competitions, business plan competitions, and this always comes up. What is your exit strategy? And what does that look like to a startup founder? Because sometimes you haven't seen that far ahead, right?
Right.
You know, what's a great kind of answer, you know, from your perspective?
Yeah. And I would first of all want to answer it honestly. So if you have a lifestyle style business that you want to pass along to your family, you probably want to look at alternate funding sources, you know. But if you are like, I want to build a company and have it be acquired, or I want to take it public because there's that much demand, or you want to be true to yourself first of all. But then if you are like, no, I want to build something and then I want to sell it, which is basically, that's checkbox number one. And then how big do you want it to be before you sell it? And then who do you want to sell it to? And if the answer is, I want to sell it to another company, then you want to think about, well, who are the natural acquirers? And those might be a tangential business, that might be a larger business, that might be a similar business that has a different market. But you want to identify those, and then you want to look at them and say, this is the, first of all, do they acquire? If so, how do they pay? Do they have the ability to pay? And are they super active in and so you can actually do that work, and you can say, these are the 3 natural targets who would acquire us, and here's how they do it. This is what they've done. They're super active in the acquisition space. That's, strategy number 1. If it's a financial buyer, look for similar funds in that space that have a thesis around, they invest in this industry, they pay this, they like to hold and then sell. And then the IPO thing is, that's the larger one. And you want to show that your plan would incorporate not just the ability to do that, but like a plan of like, okay, at year 5, we would start to team up and do a big round, in preparation for IPA. So as long as it's slightly thought through, and you can't, even if it's all theoretical at this point, if you can show that there is an off ramp, and then make sure it aligns with your own wishes and vision. But if you can show tangibly that there is an off ramp, that's a good point. That will check that box, that question.
And did you, for you, Jill, did it change along the way? Did you have to, so you had one exit strategy in mind way in the beginning, and along the way, did you kind of tweak that, or did you change that?
Yeah.
Or you stuck to your guns and said, nope, this is where I see myself and this is where I'm going?
I mean, I was bootstrapped, so I never got asked that question. I never actually thought about it. It wasn't until 2014 when I took that first round that I got asked that question. And so it totally changed. And I have to confess, never in a million years would I have imagined that we would have grown to 600 employees. I mean, it never occurred to me. I was really in the moment. So I'm a little bit of a hypocrite there. But now getting asked that question and then hearing
as an investor, right?
Yeah, like, here's how you want to answer this. Here's how they're looking at it.
And as an investor, do you ask that question of your,
Yeah. Oh, yes. Yes, absolutely. Well, and it's less, and we'll do the work too. So as long, and we're a little bit earlier stage, and our strategy is an exit off ramp a little bit earlier. So we might take, if a Series A, whoever's investing wants a larger share, we might liquidate at that time. Maybe not, it depends, but we certainly want to know that there is a very rich exit ecosystem, and we'll do that work as well.
It's fantastic. There's a question linked to this, and I'm going to quickly ask that. How do you know when to seek private equity? What is that perfect time to do it?
Well, in hindsight, I learned so much. But what I would say is, if you have something and you're seeing like there is really, really great value, and I saw a question around customer acquisition strategy, and you see a clear path of really efficient customer acquisition, meaning it costs you way less to get a customer than you create in value in the long term. if you can see a clear path to that, and it almost has limitless scale, you are constraining yourself by lack of capital. And that's where it really, like, that's number one. It really makes sense that private equity, like, here's where we are today. We're already growing 100% over 100%. The cost to acquire a customer is, 1/10 the value, that we get from them. And it's limitless. The market's massive. Like, and we can scale it, and we have the technology and the ability to scale it. That is absolutely, seek private equity. That's, number one. And then, early equity is more of a constraint. Like, I need someone to buy into this vision to build the thing so that I can prove it.
Especially if you're going to remain part of that, right? Because it's not a full exit. You intend to remain as a CEO. You are going to be driving the company. So I think these are conversations that require, deep thinking, of course. And then, personal strategizing for sure.
Mm-hmm.
That's very helpful, Jill. One of the questions is an interesting one. It's from India. When you're a young woman and you have an experienced, dominant partner, and parallelly you're hiring smarter employees, how do you keep yourself strong, and how do you stay kind of in charge?
Yeah.
That's a good question, I thought.
Yeah. And I think that dominant partners, that's probably where someone would look at me. I would, okay, so if you're doing the right thing, and you're really trying to get that dominant partner to sort of come along with you, I really am on the side of, how do you make it good for them? Like, when you're, it's a win-win for them. If there's a possibility of saying, we're doing this makes it, hey, I'll take this over. You don't have to worry about it. Can you get I'm a collaborative negotiator. I'm a pretty strong negotiator. I do not let anyone convince me to not have an opinion I truly believe in, and I will stay at it until they give in, or it's irrelevant. So that, I think I would encourage that. But if you can make it a win for them and really phrase anything about that, that's a tool I've used. That's helpful.
That makes it more appealing.
Mm-hmm.
That's very useful. One of the questions is around, and I think you read this question as well, is around business development and client acquisition process.
Mm-hmm.
If you could just shed a little light on the approach that you took, and what didn't work and what worked. That's
right. So, and some of the things I learned from private equity, this is really, really where I learned how much. First of all, you have to know, how much can I spend to get a customer? So even in your early days, if it's more than you might imagine, you have to do that work. And so I know you probably want to know, how do you get customers? I mean, for us, it was, SEO and Google and pay-per-click and even direct mail. We were, it's all the digital things. But then as we grew, partnerships became a really big factor. But it really, the bottleneck ends up being, how much can you pay to get a customer? Because honestly, we all know if it was limitless, we could just put big ads on television or whatever, host the Super Bowl. And so really understanding those metrics is very, very important. And a way to work around that is like, the flip side is, not everybody looks at pricing and packaging and really aligning those things to your customers in a way that both makes it a win-win for the customer, but also the most margin you can for you. And then I really would want to make sure, like, as you think about how much you can pay to get a customer, what is your upsell, cross-sell strategy? Do you have additional product lines in your roadmap? Because if you're spending $500 to get a customer, or $1,000 to get a customer, and you're only going to get $1,000 of margin back, that doesn't work. But if that same customer is 80% likely to stick around forever, or 80% likely to buy that second product, or 80% likely to refer somebody else, or 80% likely to upgrade upgrade something else, if you have more things to give that customer so that you can expand their ARPU, their average revenue, then the marketing equation becomes easier because you actually can spend more to get a customer. So I know, I'm sorry, you probably wanted to hear about marketing strategies, but really it's like, how can you get the most dollars allowed to spend to get a customer? And then the answer becomes easier and easier. Is that?
I actually love that. I love that approach about, focusing on the lifetime value, right? Because a lot of companies are spending money on acquiring customers and sometimes forgetting to focus on the lifetime value, right? So how long can your customers stay with you?
Yes.
And that, of course, speaks volumes of you as a company and what you're doing. And that organically brings you, more customers as well. In your marketing strategies, did you have to, learn on the job, or did you actually go and acquire some expertise, to partner with your vision and then grow it from there? How did that work, Jill, for you?
Totally learned on the job. And actually, like, I mean, it was a little bit of an unfair advantage because pay-per-click had, the Google AdWords had just come out, and I would sit home at night and just read on the internet of how to market your company. I was like, well, there's this pay-per-click thing, and it was like 10 cents a click for the ads, the words that we really wanted. And so I just started experimenting, and no, I learned all the way. And people, there's so many resources out there. I think, especially in marketing, you can't help but learn. As a CEO of a startup, you will learn marketing and just, look for it everywhere. And then it really becomes understanding who do you want to listen to and who do you like, that's not that important. My big, really making it about the customer, messaging is really important. And then really number one marketing thing is deliver a product or service that creates more value than it costs, and do it with great service. And that helps.
That's fantastic. Jill, out of curiosity, how much time do you spend mentoring women startups? I know you're an investor, you're an active general partner with Elevate 2. I know you give back a lot, but how much time do you spend mentoring women, and how do you identify who's the right mentee for you?
Yeah, and I'm really a fan of giving, meeting with somebody once, hearing their problems, seeing how I can be helpful. And then, rather than an ongoing relationships, I've had a couple where they're ongoing relationships, and I find my value kind of diminishes over time, because I generally have the one area where I'm like, here's where I can help you. And then you're generally off to the races. But, probably, I don't know, like 3 or 4 times a week, I'll meet with somebody either, on the Zoom or over the phone, or, and then once I meet them, they'll chat. Send me an email. Hey, do you have a connection to this? Or, hey, I'm struggling with this. Do you know anybody? And I'm just like, I'm a connection.
It's very important. I think those connections really help sometimes a lot more than even the hours that you can spend, because like you rightly said, the resources are there now for a lot of entrepreneurs. Sometimes it's the connections that really make a big difference. And if you have identified that this is your area where you can help, and you only focus on that, that's great. And I think this is valuable for a lot of people who want to mentor and, love to say we mentor, to really put a lot of thought into how you're mentoring. And so that's very valuable, wisdom from you, Jill. That's very helpful. There's a question from Oregon that I'm going to ask you from your neighborhood. So why did you decide to exit from this business, which is your baby, and it must have been really hard to do, I imagine. Doing great cash flow wise, etc. What made you kind of decide to exit?
So the number one reason was I decided to retire, and love Ruby, and for me it aligned to have that final exit, and again, sort of reflecting on who I am as a person. I mean, Ruby will always be my baby. I am super creative. I'm super like activator. So let's make something. And as Ruby grew and grew and grew, and I got these wonderful, wonderful, really professional, experienced executives, guess what? My work, my actual rolling up the sleeves, like all the things we love about becoming entrepreneurs, like that wasn't the job anymore. Really different, and change management and just being more of an executive versus an entrepreneur. I mean, in hindsight, it's really, really different, and it really misaligns with my natural skill set and energy. And so why not put someone in the seat that's their great thing. So that was, that combined with I had been doing it for 17 years, it was just like time.
It was time. Yeah, no, perfect. Jill, thank you once again on behalf of TiE Women and of course TiE Global. Thank you for your time and for all this wonderful knowledge that we've all got. It's been very inspiring for all of us, I'm sure. I see questions are still flying at us, but I would encourage everyone to reach out to Aparna, aparna@tie.org. And Jill, if you want to share maybe your LinkedIn on the screen, that'd be great in case somebody has a question. Of course, we promise that, all these entrepreneurs no one's going to bother you unnecessarily. Make sure we use your time wisely. I want to give a quick shout out to Smita Bagla and to Kanchana Raman. Smita is with us today. Smita and Kanchana are leading this wonderful mini series for TiE Women. It's on the first Wednesday of every month, same time. So you can block your calendars for some fantastic content that will keep coming, that has been coming. This was episode 3, as Aparna mentioned. So please look out for more fantastic sessions for TiE Women as we all travel together for our year 1 program, which is going to culminate at our global TiE Women pitch competition. I also want to just say a quick thank you to Smita Siddhanti for her time and for her excellent chemistry with Jill and asking all the fun questions. And look forward to the next one. Thank you all for being here patiently, staying with us for the entire 45 minutes. And we're trying to make this quick so that you can just grab some nuggets while you're at work or winding down for the evening in India. So look forward to more interaction with all of you. Thank you very much and have a great day, night, and stay safe and healthy. Bye, everybody.
Thanks for having me.
Bye. Bye, everybody.
Bye.
Real pleasure.
Thank
Bye-bye.
you.